Today's topic, year-end tax planning deadlines and items to consider. Initially, I thought I might cover one or two things in here. Then I started writing my list and I already hit 6, and I think there's some more to add into it. So as we come down the home stretch for 2024, most of these items likely transfer over to other years. Maybe the numbers are a little bit differently. So if you didn't find this till 2025 or 2026 or 2035, let's get crazy. These should still pertain. Clearly the tax code changes and a lot of things change, but a lot of these are very evergreen topics. So my goal is to walk through some investing items, some tax planning items, even get into some other benefits like FSAs and some other items around how to think about health insurance deductibles and things like that. So items to keep in mind for year-end tax planning, and then other items to consider in terms of strategizing as we move forward. Before we get into all the fun, if you have not subscribed, please take a second to subscribe to the channel. Click on the bell icon. You'll get a notification every time we release a new video like this one. That's my only pitch today. But if you do have questions or like to see other topics, please drop those below. We do read all those comments. You'll see we try to respond to every comment as well, as long as it's not a spam comment. And that is where, one, we get great ideas from, but two, we like to give back to you all as well for tuning in and making sure we're answering your questions. So thank you. Let's get into this now. Every 4 years, year-end tax planning takes on a more significant role. This year, 2024, is an election year. Not only is it an election year, but we also have a very large set of tax rules set to sunset in 2025. So there's a lot happening right now. So the first one I wrote down on things to consider are, you're very familiar with tax loss harvesting. I'd say that's the more common term out there. And tax loss harvesting says, hey, if you have positions that have losses, you can sell those, harvest the losses. Remember the wash sale rule, so you can't just go sell it and buy it again. You have your 30-day rule in there, and you got to make sure that you're paying attention to that part, right? But in today's world with index funds, you can usually find something relatively similar to what you were tracking. So tax loss harvesting is a very good 12/31 deadline where you're going to go through your portfolio, see if there's any changes you can make. Is there any things that you can harvest in terms of losses, and set those aside? Why is tax loss harvesting a good idea? Well, the main benefits are, one, it's going to offset other gains. So if you already had substantial gains, 2024, at least up until the time I'm recording this video, has had been a pretty good market year, but it gives you a chance to offset some of those gains. Now, if you offset all of those gains, you get to carry these forward, which is a nice thing, right? But it also offsets up to $3,000 per year of ordinary income. We like to call this a little bit of tax arbitrage, right? More than likely, at least based on who we work with and likely who's tuning into our channel, your effective income tax rate is likely higher than the capital gains rate. So you get a little bit of tax arbitrage in there. That's the more popular one. But in an election year where there's been a lot of conversation about increased taxes on capital gains, you could make a point that this year could be a good year to actually do some capital gain harvesting. Yeah, you heard me correctly, meaning that you would actually sell some stuff with gains on them because you believe that the actual tax rate for capital gains is going to be lower this year than in future years. So we call that tax gain harvesting. Not as popular. A Google search, you'll find a lot of good information on it, but it's not as popular as that tax loss harvesting. So my number one for this video, this topic, combination of tax loss harvesting, but also tax gain harvesting. All right, number 2 on my list. Technically 2 has 3 things in it. So for our clients that are likely later down the scale here in their retirement years, this is my combo punch here. We got RMDs, which stand for required minimum distributions. The reason why I hesitated to start it is if you have an inherited IRA, RMDs are still relevant to you as well. You also have QCDs, which are qualified charitable distributions, and then Roth conversions. So I'm kind of bunching these all together. They all have 12/31 deadlines. Let's walk through all of them. RMDs, my reminder is for you just to make sure you take them, right? That's a large tax penalty. That's a 50% penalty if you don't take RMDs on time. So that's a friendly reminder that, wish I could give you an exact age, but now it varies based on your birth year. Anywhere from, what are we at now, 72 to 75, you got to be taking these RMDs. They usually start off around 3.6% and then work their way up. RMDs are a huge part of longer term tax planning. I will tell our clients all the time, that's probably one of our biggest value adds as we get down the line into something called Roth conversions, which I'm going to cover in a second too. QCDs, when those RMDs start, technically QCDs are still allowed as early as 70.5. There was a little bit of disconnect, I think, when they wrote those updated laws, but QCDs are qualified charitable distributions. And I know the 12/31 deadline, I would actually argue doing those a little bit earlier, if not much earlier, like early December. A QCD says, hey, I don't need my RMD. Because remember, when you get your RMD, it's taxable. Instead of sending me the check, send it to charitable organization. I'm going to say, instead of sending me 10 grand from my IRA, from my R&D, send that 10,000 to my friends over at the Red Cross or the Humane Society. And that is a QCD. So you essentially said, hey, I don't want the RMD. I was already going to write a check for 10 grand anyway to the Red Cross. Now I just want to actually send that rate to them. And QCDs are a really neat tool because now you didn't pay taxes on it, right? You sent that money away. Make sure your accountant knows this. This is not reported very well on a 1099. So make sure you tell your accountant that, hey, yes, I did get a 1099, but I also made a QCD directly to the Red Cross or whatever the charitable organization would be. And don't worry about the charity, right? Because they still get that money tax-free regardless. So QCDs are a really neat tax planning tool. But again, 12/31 deadline, I'd argue even sooner. And then Roth conversions. One of my favorite ways to limit future RMDs is to do Roth conversions. Roth conversions, for a lot of our viewers who are used to the backdoor Roth, think about this idea similar, kind of like, I call them like cousins, right? But later down the line, you have all these pre-tax dollars. So when we can control the story, right, we know the tax laws in this year, right? So we can go through and say, hey, if we convert $50,000, we're now going to, yes, create a tax bill. We are creating a tax bill on purpose, ideally filling up some of those lower tax brackets. But then the goal is that it's going to lower your future RMDs, right? Because the lower amounts you have in pre-tax dollars, you have to take lower RMDs. And it's just a way for you to control your narratives. But the reason why I include that one in here is Roth conversions are also a 12/31 deadline. So make sure you're getting that conversion done, completed before 12/31. All right, number 3. This one is a little bit unique, but if you had anything that threw off your income this year, the ones I wrote down, the most common are inheritance, if RSUs are vesting. While we work with physicians, a lot of our physicians have spouses, significant others in tech. RSUs are very popular, even in pharmaceuticals. RSUs vesting, stock options, bonuses, or your W-4 was off, right? If you had a large tax bill last year and you didn't update your W-4, right? You were already maybe under withholding. One chance to lower your tax bill, but more importantly, lower your tax penalty. If you're only making a Q4 payment and you were off throughout the year, keep in mind, you're still going to have an underpayment penalty. It's weighted, right? That's why you're trying to always do quarterly payments, Q1, Q2, Q3, Q4. But the reason why I wanted to include this one here is because you still have a chance to fix it a decent amount with that Q4 estimate. So we call these quarterly payments, but your Q4 payment's not due till January 15th. So if you believe your number was off, or if any of those circumstances apply to you this year, also, this is a good time of year to have a conversation with your accountant. Everyone gets mad that their accountant's not proactive, but they're asking them detailed questions on April 12th, and they can barely survive at that point. They're on probably a half hour sleep, their 700th coffee. They're not going to be very proactive there. They're strictly reactive. So if you are looking to have a better tax planning conversation with your accountant, this is a really good time of year, really from this time of year, because we just got through the extension deadline up until early 2025, again, recording this in late 2024, before tax season really fires up again for them. Good times to have a conversation with your accountant. So check on that number. You still can make up a little bit of ground there with that Q4 estimate. All right, number 4 it's a hodgepodge. I got a whole bunch of different things written down here. Most of these are deadlines. So I want you to keep in mind, most of these are investment deadlines. So if you're trying to top off an account, max out an account, here's where we got to keep an eye on things. So your 401k, 403b, 457b, all included in here. The employee side of it. So employee. So if you are working at an academic hospital, right, this applies to your payroll deductions. That is a 12/31 deadline. So if you're watching this video in November and you're saying, oh, sugar, I did not max out my 401k or 403b, you can make those updates in your withholdings before the year is over. If you're on the employer side, right, so you own the businesses in this example, this likely pertains to you, right? You have 1099 income, or maybe you're all 1099 income. Solo K, very common here. SEP IRA, very common here. Again, if you had to pick between the two, lean towards the Solo K. You also try to always have these accounts opened up by 12/31, just kind of gives you more flexibility in there. Those do have an extension deadline, but you got to keep an eye on the rules there on getting those up and running now. Solo Ks have gotten a little bit easier with some of the items that came in through COVID timeframe, but keep that in mind. That's the employer side of it. That's where you can get that max out, but that can go all the way up to the extension deadline. IRAs, Roth IRAs, that is an April 15th or tax filing deadline. I say April 15th, but if you file taxes on March 15th, March 15th was actually your deadline. So keep in mind that that is your contribution to your IRA or Roth IRA. Now remember, if you are doing backdoor Roth IRAs, you have a little bit more flexibility here in terms of the contribution is the important part. You can actually do the Roth conversion whenever you'd want to. We like to hold a little bit, just following the step doctrine. So we like to hold off at least a month. Some will do a quarter, some will do a year, some will do the next day. Regardless, the main part of the backdoor Roth needs to be completed by the tax filing deadline, which that is your non-deductible contribution contribution to your IRA. HSAs, a tax filing deadline, right? So when you file your taxes, your HSA is due. Now remember, if you are doing this through your payroll, through your employer, that's going to be really a 12/31 deadline. So if you want to make a lump sum contribution, you usually have to do that directly through the provider. So, let's just say you got $5,000 in there, but you wanted to get it to $7,000 this year. You would have to write a separate check for that $2,000 to hit that number. 529 plans. Most 529 plans are a 12/31 deadline. Some are a tax filing deadline. So just keep that in mind. I just wanted to throw that one in there. So these are really if you want to top off any of your vehicles in terms of your savings buckets, but it's not just one deadline. As you can see there, right? We have some 12/31, we have some tax filing deadline, then we have some extension deadlines as well. So number 4 on the list here, that hodgepodge of deadlines for a lot of the investment accounts. All right, a few more as we come down the home stretch here. Number 5 on my list was all about the FSA, the flexible spending account. Remember, FSAs can have healthcare side of it, but also dependent care. Some FSAs now allow, this number can change based on inflation, about $640 to roll over. This is based on your employer, right? Your employer makes these rules. Some will allow $640 to roll over now. Some will have an extension deadline out to $315, and most will allow you to submit receipts up to 90 days. That's important though, because FSAs are one where if you don't use it, you can possibly lose it, right? So if you put $2,000 in the FSA, but you don't have any of those fancy rules in place, you could lose all that money. It's gone. So just keep that in mind. FSAs are one that you got to keep a close eye on. If you're just getting into FSAs, I always say fund them a smaller amount to get started. Make sure you're going to utilize them, kind of set up your system per se, but keep an eye on the FSAs. A few others I added in here, we'll call it 6, but I kind of wanted to bounce around a little bit. If you're watching this in November and you hit your health insurance deductible, or even crazier, you hit your max out of pocket, now's the time to get any other things done, right? So if you maxed out deductible, if you maxed out your max out of pocket, now would be a good time. If you got, that achy hip, that knee's been bothering you, whatever the example would be, now is a very good time to get things done before the end of the year, because remember, they all will reset. So just kind of one of those unique ones out there. A few other ones I wanted to note here is the gifting limit. That's that $18,000 number. That's again 2024. That is based on inflation, but gifting is a 12/31 deadline this month. I don't know if it's going to go before this video or after this video just yet, but we'll also have an entire video on the gifting limits and how to take advantage of that. But that is a 12/31 deadline as well. And one that we always like to note in here, if there was any changes in your current situation, whether that's family-wise, you had more kids, hopefully you didn't have a divorce, but if you had a divorce, something of that nature, anything life-changing updates, don't forget to always take a quick peek at your beneficiaries. Those are things that you should always keep an eye on year in and year out. But those are some really good items. I'm also going to take the main flow chart that we have set up that we'll include in our show notes. So if you scroll down to our show notes, we covered a good amount of them, but we have a really neat flow chart below where you can actually walk through all of these and a lot more. I didn't cover. We try to always keep these videos to at least 15 minutes or a little bit less. So I'll include that in the show notes as well. That should give you a really good overview of things that you should be keeping an eye on to end the year. As always, thank you for hanging out with me. If you've not subscribed, again, please subscribe, click on the bell icon, get a notification every time we release a new video. If you have topics you want to see, questions you want to see, drop those in the comments below. As you can see, looking back through a lot of our videos, we try to answer pretty much every comment we get. We really try to build the community. We appreciate you watching the videos, so we make sure we spend time also answering your questions. So as always, thanks for hanging out with me for the last 15 minutes or so, and I'll catch you on the next video.